The favorable macroeconomic trends continued in major advanced economies over the last couple of months. Growth accelerated in the fourth quarter of 2013 in the US and in the Eurozone, and already strong growth became more balanced in the UK. In Japan, net trade gives a new stimulus to the economy after the initial boost from their reflationary strategy. We expect the US to grow the fastest among major advanced economies in 2014 and 15. Growth rate could exceed 3% by next year. There are a couple of factors supporting growth in the US. Household incomes are improving, corporate profitability is strong, and there is an easing in the fiscal consolidation. And monetary conditions remain loose for the next 2 years as well. In the Eurozone, we expect a gradual recovery to continue this year and 2015 after the recession last year. We expect cyclical conditions to improve both in the core and both in the periphery countries in the Eurozone. Domestic inflationary pressures are unexpectedly low in major advanced economies, despite the improving cyclical conditions and the still very loose monetary conditions. Core inflation, for instance, has declined quite substantially in the Eurozone and in the UK over recent months. We expect inflation to be the lowest in the Eurozone, well below the ECB's target in 2014 and 15. Monetary policy options to respond to deflationary shocks are more constrained in the Eurozone. Also, in the periphery countries, adjustment is more complicated in an environment of very low inflation, which is increasing the burden on periphery countries for adjustment to improve competitiveness. Finally, an exogenous shock, for instance, slowdown of emerging countries, can also amplify deflationary risks in the Eurozone. In the report, we analyze an alternative scenario where an emerging market slowdown is triggered by a global risk premium shock. Our baseline scenario is that growth rates in emerging countries will be broadly flat in 2014-15. So these countries will not take advantage from the improving growth in advanced economies. In the alternative scenario, the risk premium shock affects all the countries, but at the individual country level, the impact depends on the extent of foreign capital inflows and on the domestic response to the shock. The results show that the largest impact would be in India, fairly smaller in Brazil and Russia, and among the BRIC economies, the smallest impact would be in China. Still, in advanced economies, the impact would be even much smaller than in China and mostly visible in Germany and Japan.